we still need to complete step 3 to account for our lease and classify it as either an operating or finance lease. Let's begin to walk through those criteria now, which will inform the additional work we need to complete in our workbook for the classification. You'll remember that if a lease meets any of the criteria laid out in ASC 842, 10, 25, 2, we'll classify it as a finance lease. If it meets none of the criteria, it's an operating lease. So first, does the lease transfer ownership of the underlying asset by the end of the lease term? If we look at our lease and focus on the end of term section here, you can see there is nothing to suggest ownership is transferred at the end of the lease, so we do not meet that criterion. The second criterion is very similar. Does the lease include an option to purchase the underlying asset that we are reasonably certain to exercise? Again, the answer here is no. There is no clause for purchase of the asset. Then third, does the lease term cover a major part of the remaining economic life of the underlying asset, which per the standard we can reasonably consider to be 75% of the remaining life of the asset? Well, we know the lease term here is 3 years, so to meet this criterion, the total remaining useful life of the asset would need to be 4 years or less. Now this again requires some judgment on our part, and without an actual piece of equipment to consider, it's difficult to determine this information. But let's assume the equipment is brand new when we lease it, and we typically depreciate similar equipment we own over a 7-year period. This is strong evidence that the lease term does not cover more than 75% of the remaining useful life of the asset, and we have not met this criterion. So we now turn to the fourth test. Does the present value of the sum of the lease payments equal or exceed substantially all of the fair value of the underlying asset, which we'll consider to be 90% or more of the fair value, in line with the guidance in the standard? Let's assume in our due diligence for this piece of equipment we looked at leasing it, and we also received a quote to purchase it for $190,000. So is the present value of our lease payments made after the commencement date 90% or more of $190,000? Let's find out. To do this, we'll turn back to our workbook and begin to build out the tracking for our lease. Let's add a section here to hold our lease worksheets. We'll create a placeholder tab called Current Leases and give it a different background color. Then we can create a new sheet to hold the equipment lease we're looking at and name it with the identifier we gave this lease, 1.0. We'll add a header here. Let's copy it over from our lease list, and we'll use the name of the lease as the subheading, but we'll populate that in a minute once we have our identifier as a lookup value. Now over here, starting in column B, we'll add a few sections, starting with the relevant lease information. Let's add a section header row here. This will end up being 3 columns wide. We'll see the reason for that as we go. But first, let's add the items that we want: the identifier, the measurement trigger, the initiation date, effective date, termination date, the lease term in months, the discount rate, the classification, which we haven't yet determined, and then finally we'll have a line where we calculate our effective monthly interest rate, since we're making monthly payments but we have an annual discount rate. Then our identifier will be 1.0. We'll give that our blue background to highlight that it's hard-coded, and we'll use that to grab the rest of our information. So we'll use an index here. Let's say equals index, and the array we want to look at is our lease list, and we'll grab one extra empty row at the bottom here so that as we add leases we can add a row and the array will automatically expand with us. Then we need to find the row of our lease, so we'll use match. We want to find the 1.0 identifier. We want to find it in this identifier column here, and this will be an exact match. Then to find the column, we'll again use match. We'll look up the measurement trigger and find it in this header row here. Then we can lock our cells and copy this down for each piece of information. Now we just need to format these. The dates are dates. The term is a whole number. The discount rate is a percentage. And the classification will have no formatting since that will be a string once we classify it. And finally, because our lease payments are made monthly, we need to convert our annual rate into an effective monthly rate. We'll do that by taking 1 plus the annual discount rate, raising it to a power of 1/12 to convert it to an effective monthly rate, and then subtracting 1. You'll sometimes see people instead divide the annual rate by 12, a much simpler calculation. And in practice, the difference is very likely immaterial. It's probably fine to do it that way, but that math does technically assume the annual rate is a nominal rate with monthly compounding. In our case, we built up an effective annual rate, so converting it to an effective monthly rate is the mathematically sound approach. And since we only have to do this once, we'll go ahead and use the effective monthly rate. Okay, so with all this in place, let's start to build our schedule. Remember that for our ongoing lease accounting, we'll use the effective interest method to calculate the lease liability, no matter how we classify this lease. And we can also use that schedule to calculate our present value. So at the top here, let's create another section to hold our lease liability schedule. This will end up including a number of columns, but let's just start with the period and date. So we'll add a header by copying our lease information header and title it Lease Liability Schedule. And then we'll add columns for the period and date. So we'll start with period 0. This will represent our lease commencement date. And then we'll move forward from there one period at a time until we reach the end of our lease term, which for this lease is 36 months. So we'll start at 0 and then for each row just add 1. Let's align the text to the left and then copy this down until we have 36 periods. And then let's make this column bold as well. I just think that's nicer formatting. Then next we have our dates. So our period 0 date is the commencement date. We'll simply link back to that in our lease information. And again, let's align this to the left. Then remember that each lease payment is due in advance before the first of the month each month. So for measurement purposes, regardless of the exact timing of the cash outflow, we'll assume the payment is made on the last day of each month going forward in advance of the next month. This really simplifies our monthly accounting, and it's a reasonable assumption. We need to make our payments on time, but ideally we'd pay no earlier than necessary, which means the payment should be dispersed pretty close to the last day of the month. So in our period 1, this will be December 31st, the day before the second month starts on January 1st. So the formula we'll use will be end of month. We'll grab the previous date, and in this case move forward 0 months. And we'll copy this down for formatting. And going forward, for every month after this first month, we want the end of the next month. So we'll say end of month, grab the previous row, and then move forward 1 month. Then we can copy this all the way down to the end of our lease term. And as you can see, our last period ends on November 30th, 2028, our lease termination date. Finally, for our dates, let's just highlight these first 2 dates with a different color so we know the formulas are inconsistent here with the rest of the column. Now we need to add our payments each month. So let's add a column called Payment and center align it. Now let's go look at our lease. You can see we pay by the first of each month the amounts here. So it's different during each year of our lease. And we'll assume we pay that first $5,500 payment for month 1 on December 1st, the lease commencement date. So we'll need a lease payment schedule we can use. Back in our workbook, let's add another section here for that below the lease information. And what we want here is the beginning and ending dates for each payment. So we'll create columns for those. And this last one will be the payment amount itself. So we'll give this a bottom border and then we can add our information. We have 3 different payments during the lease, but the first one is made on the lease commencement date. And under ASC 842, the lease liability only includes payments made after the lease commencement, which makes sense. We shouldn't have to record a liability on our books for a payment we've already made. So as far as our liability is concerned, the first payment begins on December 31st, 2025, and would end on October 31st, 2026. That payment on October 31st, 2026 will be our payment in advance of November 2026, which is the 12th month of our lease. That will ensure 11 payments at our first payment amount, which, if we look at our lease, was $5,500. And we'll include that first payment on commencement of $5,500 in the right of use asset later, but not here in our lease liability. Then beginning on November 1st, 2026 and ending October 31st, 2027, our payment will be $5,650. And finally, beginning on November 1st, 2027 and ending on our final lease payment date, October 31st, 2028, our payment will be $5,800. Now we're ready to add our payments to our schedule, and we'll do that using a sum product formula. Essentially, we want to find the payment amount for the reporting period where the reporting period is between the beginning and ending dates on our payment schedule. So we'll say equals sum product, we'll create an array, and say if our period date is greater than or equal to the beginning date in our schedule, then another array for the same period date, but this time less than or equal to our ending payment date. And finally, we want to include our payments. And if we lock our cells and copy this down, you can see we're accurately including the payments each month, beginning at $5,500 in this first year, increasing to $5,650 in the second year, and increasing again to $5,800 in the third and final year. So that's a good start to our lease tracking. Let's stop there for now, and in the next video we'll finish calculating the lease liability.